this video, we're going to talk about how to identify high probability setups using price action rules. And the very first thing I have to do as a price action trader is to do my macro analysis, identify the overall pattern, the overall structure, and look for potential key entry point, because every single move in price action happens for a reason. And right now the market, this session started with the trend range pattern. We can see flat EMA, consistent price swings up and down, but I can see there is bearish imbalance. It means every single major high is lower and lower, and if you're trying to identify the resistance, it keeps moving lower. There's empty room at the top. This tells you there is more of a bearish bias, so I'm thinking more about selling rather than buying. But I need to get a good high probability setup at the exponential moving average. I didn't see any good easy high probability setup. These setups are decent because downtrend is new extreme, but they're a little further from the EMA, so I'm just going to be patient. Now we have a failed breakout. Most breakouts at trend ranges will fail, but I'm not going to fade this breakout given the bearish imbalance. The market can continue working lower, so the bearish imbalance got confirmed. There is more of a bearish bias, and at this point I'm starting to think more that we may evolve into some downtrend. So I'm pausing, looking to go long, and I will need a little bit more information from the market to see what the structure is going to develop into. So take things slowly, don't rush things. And market is correcting, and at this point, this is where I'm going to zoom back, and I can see price action is creating every single high and low, lower and lower. You can see push phase, correction phase, push phase, correction phase, push phase, correction phase, push phase. So it's no longer resembling a trend range based on pure price action. And because we have so many consistent lower highs and lower lows, I'm going to be looking for some channel. I was looking for a couple alternatives, and I like this channel as of right now the best. I'm going to copy it, put it at the bottom. The channel fits fairly well, so you can see the bias right now based on pure price action has been established as bearish. So now I'm definitely not thinking about buying. I'm going to be respecting the correction, and I'm going to wait for the correction phase to end at key entry point and take a second entry short high probability setup. So you have first entry short, you can get a second entry short. Had there been second entry short here, you cannot take it because it's so far from the EMA. And now we have signal bar for second entry short that is going to be break below this bar right here. Now when I was watching this live, I actually made a mental mistake. I didn't take this. But when I can see the support, the resistance here, EMA keeps projecting, the downtrend is new extreme, the bigger pattern is in play, because it just was a little bit too sideways, so I wanted to see a lower high, but this is decent second entry short because EMA keeps rejecting and there is some resistance here. Great signal bar, and market continues to work lower. Now new low has been made for this move, so this is no longer a lower high because it's not part of this low right here. It basically acts only as a first entry short. So right now I'm not taking any stop. You can also see how the correction is tiny. A lot of times when the pullback is so tiny, that means you can get squeezed here and trapped. So I'm not taking any second entry short. I'm taking no setup. Okay, and market keeps going sideways and keeps going sideways. So I can see there's definitely some resistance. We are failing to break it. Problem is we have also support at the bottom. And even though EMA keeps projecting so strongly, I really don't like selling right into these lows. It is way more aggressive into the support, overall consolidation, even though it worked in hindsight. Not the safest entry, and market continues to work lower. So right now your bias is definitely confirmed as bearish. So trading is simple. Wait for correction phase to finish, draw the short-term channels. Once there is a break or temporary new extreme, this is when you can start considering selling high probability setup in the form of a two-legged pullback. Now we have new low, first entry short, second entry short. Now this uptrend doesn't fully have new extreme, and it looks a little bit wedgy here. So I wanted to see break a new high technically, but I am going to mark it. If you took this up right here, developing trader watching this, and this is not a bad setup to take a chance on. Second entry short, the signal bar is that great, but it feels a little bit too wedgy. It feels like it may need to get the break at a new extreme. So this would have ended up being a losing trade, but it's okay, it is power trading, or you could have had stop loss actually above this swing. Sometimes it happens like that when it is only one tick away, but either way, if you had a losing trade here, that's not a bad entry. And now you have felt second entry long combined with triple test. New high, first entry long, pullback, second entry long. So this is not a bad setup. I would have liked it more had it been broken below EMA. But this is decent entry, new high, first entry long, second entry long. The triple test is a good sign. There's probably not going to be new high anymore because the resistance is strong. Sellers are stepping into the market. and it looks like a tool, like a pullback. So you can take a failed second entry long combined with a triple test, can get lower high. We cannot. Now we actually have a lower high. The low we counted from was not broken. So this is a lower high confirming this triple test for second entry long. Problem is this is an inside bar. Okay, context wise, this is great setup. Okay, had there been a break higher above this bar, reversal down, you can definitely take it. But actually there's a mini lower high here. But this can act as a visual one or technical failed second entry long. Either way, inside bar. Great context because we're gonna go lower, but it just didn't form that great. And now we have a failed second entry long. Problem is, once again, directly into these lows. Now, at this point, you may start to anticipate the market's gonna break lower because all these buyers are buying in this downtrend. So gut feeling will tell you that you're gonna go lower, but this is more gut feeling based trade, more experience based. So for this reason, it is a little bit more aggressive. Okay, right now I'm not even thinking about selling because we're far away from the EMA. You can see the EMA can act as a key entry point. Now I'm going to redraw the short-term uptrend. Now I'm drawing it like this. Why am I drawing it like this? Because you can see we had a little push here, a little arc here that allows me to draw a wider channel with this high low. You can see there's a different structure from this leg where the high low is much higher. Here it allows you to draw the arc straight from the very beginning of the uptrend. For this reason, I'm drawing wider channel. You can see there is no push lower here. Very strong first leg, very strong first leg. So I'm respecting the correction. We have a second entry, sure, we have uptrend in play. We have a lower high, but it is enough with the EMA. Far from the EMA, uptrend is new high. The push phase was quite strong, so I want to see market to correct a little bit more. Okay, we have a break, close outside, new extreme. So this right here, market created new high. And it is once again almost looking as triple test. This is technical broad double top. But this is breaking new high. You can call it as a new high first and strong second entry long failure. I'm gonna mark it as basically triple test. I actually like this setup because now that you have a break and a new extreme, great signal bar, EMA keeps projecting every single time, decent entry. There is no lower high. Now you cannot sell directly into these lows. Horrible bullish doji. You already have new extreme, so just be careful. It was great, quick little scalp. And market right now is correcting. So what's going through my mind? Well, I'm still thinking bearish, but I'm letting this correction to play out. Remember, there needs to be equilibrium in the market. Traders sometimes they get chopped selling at the very bottom, and that's how markets are designed. Lure you in after you've been watching this for a long time. Let the correction play out patiently, but either way, they're decent setups. So right now I want to see break a new high and then consider failed second entry long below EMA. Okay, we're breaking the channel and we have a new high first entry long, but there was no failed second entry long. Okay, I can redraw a brand new channel like this. New high first entry long, second entry long failure. Problem is, it moved quite lower down like this, quite significant push down, and the body is not full at EMA. But if I'm going to zoom back, you can see this is clearly a very, very strong downtrend at this point. We need to get new extreme according to trend line rules. So as a price action trader, your goal is to identify the bias, which we have. Look for the key entry points. This is clearly coming from a key entry point or alternative to key entry point. You either have it in play or you need new extreme. So your bias is bearish. You want to see new low or brand new push phase. And you're looking for correction phase to end a key entry point and sell here. This is why we're drawing the short-term channels. We have the EMA or looking for this key entry point and trying to sell a high probability setup. So failed second entry long, I'm going to mark it. It is a little bit more difficult to take, but it is not such a horrible setup. I was personally looking for second entry short, which never formed. Market continue working lower, creating the break and the new extreme. So right now we expect for price action to correct or reverse. Now, given how strong the push down was, this trend, reversal is not that likely. And also I can see because the trend range, the trend is quite broad, it is indicating trend range. You have push down, push up, push down, EMA is starting to flatten once we have a break in extreme. So I'm going to automatically project possible key level support, the resistance. So right now we expect stronger correction. Okay, market keeps working higher. I'm gonna redraw a brand new uptrend like this. It's because this leg is so much bigger than this. It begs the question, there's a bigger uptrend in play. So you can see it definitely resembles a correction phase, the market cycle. I'm gonna redraw the short-term downtrend. First entry long, second entry long. I cannot go long just yet. Short-term downtrend is in play. And now we have double trap. All the early longs got trapped. Notice we close outside of this short-term channel, and on one bar we create a new extreme and we reverse all the way back up. I actually took this trade for a tick small scalp because I was looking for a new high for this uptrend, but it is a little bit more aggressive because your main bias is bearish. So you're focusing more on letting the corrections play out and consider selling again. But because at this time it looked like a break new low and I'm playing the trend range, this leg is steep, this is double trap, more confirmation than second entry long. So I was looking for a new high, a little bit more aggressive, but it created a break new low, reverse instantly, decent entry. Attempt for a new extreme was made and market broke below EMA. So now it's starting to get a little bit confusing. I was thinking we may get second entry short, but we pushed above. So I cannot take second entry short above EMA. Now I'm pausing, taking anything because there is some high low here. What is the bias? I don't know. I don't know if there's a good channel. I'm just going to be patient. And plus, we have FOMC announcement soon. So don't be trading the hour before FOMC because market really gets very quiet, very slow. And let the news come out. Don't trade for a bit because there's a spike in volatility. You can get chopped. You can take massive hit because the bars are gigantic. You can get a slippage. So don't trade right around the FOMC announcement. So I'm just going to skip this through. You can see price action rules still applied. I'm just going to let it correct a little bit. So price action keeps trending out of this trend range. Okay, market broke higher. So at this point, I was thinking about first leg working higher. You have a break in new extreme, but you can see it resembles possible spike in a channel. So let's see if this will get confirmed or not. So at this point, I'm expecting second entry long at the EMA. You can see the spike in a channel is nicely confirmed. But market is completely reversing down. And once you retrace over the 60% mark around that, you adapt. So I get this question a lot. Notice how deep this retracement is. It retraced the majority of this push up. Just adapt. Okay, especially now, just adapt to a brand new downtrend. So I'm going to connect the first few swings at the top like this. I'm going to copy it, put it at the bottom. So now, what am I expecting? Well, I'm expecting right now, because the bias is bearish, two-legged pullback, second entry short at the key entry point. We have a new low, first entry short. I'm going to redraw the short-term uptrend. Close outside, new extreme. This is what I want to see. So we have a close outside, break new extreme. So this is telling you that this bullish correction play out. Where did it play out? Right at the EMA. First rejection, second rejection. New low, first attempt to sell, second attempt to sell. This downtrend needs to get new extreme, and this is perfect high probability setup. This right here is the second entry short. Second entry short, high probability setup. This is where you combine all price action rules. It is completely textbook. It doesn't get any easier. Downtrend is new extreme, uptrend played out, two-legged pullback, second entry short at the EMA. Great tier 1 signal bar. You can even use limit order if you don't want to risk that much. And now you have a lower high confirmation setup of this second entry short, plus the EMA held for the third time. Downtrend still needs new extreme. There is no conflicting bias. Even better lower high confirmation setup. So great textbook high probability setups back to back. You put your stop loss one tick above the single bar. You're going for a scalp, and you can continue holding the runner. And this was the trade of the day, both of them. And look what a gigantic runner. This would have been 20 points worth of a runner. Easy trail too. So this is absolutely textbook setup. Now, because we push so far down, I'm going to redraw a brand new downtrend like this, because it doesn't act as a break in new extreme. It keeps pushing, keeps pushing, keeps pushing. It is much larger. So there's a brand new downtrend present like this. So this is a very strong downtrend. Bias is still bearish. So I'm not going to be thinking about buying. I'm going to be thinking about selling. Okay, we have uptrend working higher. I cannot sell above EMA. You can see the broader channel got confirmed. Let's see what's going to happen. I cannot sell unless we have a break in new high. You can see we don't have a break in new high. Flat EMA, so this is why I'm drawing the trend range. This is getting a little bit unclear, more of a consolidation. So I'm thinking about possible breakout pullback. I don't want to sell in the middle of this consolidation while uptrend may need new extreme. Don't go long because the main pattern is bearish. This downtrend is new low and the overall daily bias was bearish. So let the correction play out and think about selling possibly at the top. Okay, you're breaking new extreme, great. Can we get some good short setup? You have a new low. Okay, there's no break here, no break here. So no first entry short. We have a first entry short. Can you get a second entry short around this resistance because you'd be selling high and this uptrend played out with the break new high. Okay, but there is no second entry short. Okay, we actually have it. Okay, it is a lower high compared to this full breakout. The signal bar is quite big, but because uptrend played out now, this downtrend is new extreme. This is decent high probability setup. You can consider selling a lower high right here. And now we have a failed second entry long. Problem is, you know, it's not fully breakout pullback. It is directly into these lows. So I'm not really excited about this setup just yet. Let's see what's gonna happen. And now I can see market is getting a little bit way too late. Break and new extreme was made, and now we're about to close, but you don't want to be trading this late. Very good trading day overall. A lot of trading opportunities, even if you have one little losing trade, a little fake out trap. A lot of opportunities for you to make it up. So make sure you're going to take a break. You're not mentally affected because there are always good trading opportunities. Eventually, there are a couple more aggressive setups that you can make a case for, but we talked about the most important ones, the most high probability ones, and you can see identify the bias, look for the key entry point, wait for the correction phase to end, and take a high probability setup. I'm going to wrap it up. I hope you had a good trading day and good luck with your trading.